focus on the lesson. Live in the hills, but it still get a spread. Started with a live, but it still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but the sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
All right, ladies and gentlemen, I hope you had a wonderful weekend. I got another watch list for you, and I'm getting kind of bearish this week. If you don't know, we have the long-awaited CPI that is coming out on Wednesday, but on Friday, we are coming off of volatility because we had a good jobs report. I know a lot of people were kind of confused. Why would a good jobs report mean bad? Because the Fed and Powell are probably going to keep going crazy. So we got a lot to go over. We have a little bit of a basis check again from Fed futures down to the yield curve, down to the CPI. But then on top of all of it, we still got earnings and a lot of other data from overseas. So we got a lot to go over. I'm going to explain what's happening this week, why I am feeling kind of bearish about it, what people are expecting, and then the plays that we have in the plays for the rest of the week. So drop your thumbs up on the video, make sure you're subscribed, and if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/the stock market. We will see you there in the morning. And this one's amazing, baby. Today is Sunday, tomorrow is Monday. I need your help on the random account generator, Dev the Lurker. God bless you. Look at it. We had our bounce. We're back to 2,700. We killed it on Amazon. Thank you, Dev. But post a random play right now. Come on, let's keep it going. Random strike price, expiration date, option, keep it below $100. You know what it is, but let's go. I'm excited. I love it, baby. God bless you. So that's pretty much it. And then, yeah, that's it. I love you. God bless you. So right off the bat, like we said, CPI on Wednesday is going to be a big key. And on top of it, you are literally going to get a couple of Fed speakers right when the CPI comes out, or like an hour afterwards. So it's one thing about the data that will probably be the big story, but then after that, you are going to get some supporting or opposite comments from the Fed. But remember how that's played out over the last couple weeks. Even last week, we were talking about it. A lot of people were ignoring the Fed, and that's why I'm kind of bearish coming into this week, because maybe into the CPI, maybe people listen, but this week after the CPI, you are going to get a bunch of other Fed speakers. But now, beyond just the release of CPI, you still got a couple earnings. I think we're going to hear from Coinbase and Disney, but you're also going to have a bunch of global CPIs, like 6 other countries. They're going to have their CPIs, or even going to get GDP data out of the UK. So that could be interesting. And then on top of it, over the weekend, there was a bunch of politics. So you might get to hear about like a chip deal, spending package, infrastructure, who it's going to affect. There's been a couple of winners and losers. So definitely keep your eyes out for that. But it's very clear. We've talked about it all week. I'm really excited about it. It is all about this CPI, pretty much leading into CPI. And then after we get the data, that is going to give us a big move. And now pretty much here is your breakdown. I'm going to go over this the day before CPI, but I just want you to understand it now. And I want you to have like a data check before this week to see where things end up. But to keep it simple, the headline number that is expected to come in lower at 8.7. Last CPI, we reported a 9.1, but now core, which has kind of been declining and peaked a couple months ago, that is expected to have come up at 6.1%. So both of them are expected to come down a little bit. And now this is a really big key about this CPI, because why would headline come lower and core, which is excluding food and energy, come up? Well, you've seen oil, you've seen the commodities. A lot of people are expecting a positive impact on CPI because of gas and how we've watched oil prices and food prices come down. So that's what's going to make this interesting. But now both of them are expected to have their slowest month-over-month gains. Both of them are expected to come in from last month at the lowest pace since January 2021. So all of this is important. We talked about it at the beginning of last week. The real thing you need to understand and what makes this so big, it's really the picture right here. And I have 2 things to show you. One is that people are expecting inflation to calm down. All of the estimates are now at a lower peak. Remember, about 2 months ago when it came in higher, we had that freak out, and then the Fed and everybody had to jawbone it back. So if it does come in above 9.1, you will watch something very bearish, and we will watch a lot of volatility come back. But now, if we come in below as expected, there's a lot of other factors that will still make this week difficult. And now that's what you see on this chart. This is what I said to you already in words. The top line right there is the headline. That is expected to come down and not set another high continuing this trajectory. But you see core and dotted, that is expected to come up. So depending on how one or other of the metrics move, pretty much core or non-core, whatever we get from here, we might get a lot of information. And like we've been saying, the market is very data dependent, and I really think that is going to cause the big move. So that's the quick breakdown coming into it. But now take a look at our two favorite metrics coming into this. The yield curve now at the beginning of this week is at -40. So keep your eyes on this. And then September rate hikes. Right now you are getting a 52% chance of a 75 basis point hike. And then there is a 48% chance of a 50 basis point hike. But why this is important, watch this throughout the week leading into the CPI, after the CPI, after all of the Fed speakers. This is pretty much going to be your market reacting to the panic gauge. Essentially, if that starts pricing in something more hawkish, the market isn't going to ignore it much longer, and that will bring in bearishness. However, if we see that cool down based on the CPI or anything else, well, the rally actually might even continue, even though I am pretty bearish. Yes, I know. So finally, watch for Friday's volatility, watch how it plays out. And then another thing on top of it, beyond what we're coming off of last week, getting ready for the earnings and all of that, over the weekend, Berkshire Hathaway, we got their quarterly reports, found out Buffett is buying more than he is selling, and that's kind of a good sign. So we'll see how people take it, but now that data is going to cause a move. Watch how it affects the Fed futures. There is a big chance of bearishness, but even in that, the market might be able to continue its rally if the market gets a Goldilocks scenario from CPI, or it's not as bad as feared. So I hope you're ready, but let us get into the plays. So right off the bat, I got a couple of plays. I got two that are bearish, and then I got one that is bullish. We have a couple of plays from last week. We still got that Unity. That one hit nice. It's still up 200%. A lot of people keep asking me, am I in it? Yes, and I'm pretty much going to look to sell it the day before earnings, and if I don't sell it, that means I'm going for the gamble and I'm going for the big one. But you can ghetto spread it. You can sell it now, take like 200% profit, or I think like 400%. I'm not too sure, but do what you need to do with it. Again, if your account warrants it, it was a nice hit. If it was a small play, you went small, want to push it, and you've got some wins and could sacrifice it, go ahead. But that one was a nice one. That's one that I'm watching on the upside. But why I'm kind of starting with that, because I am getting a little bearish this week. So first play I'm looking at, I did make a SPY put for this week on Friday. We'll go over that play, but I really did like the SQQQs. I went for the calls, and like I'm saying here, I like the puts this week, but you gotta be cautious for the pump fake. What I'm trying to say is, do not underestimate the market's ability to turn bullish after the CPI. So even though I'm grabbing some of these plays, I want to account for that. And now with the SQQs, the play that I made, I actually went with the debit spread, and I grabbed the August 19th 41 calls, and then I sold the 45s. That pretty much turned a $100 contract into 60 cents. It capped my max gain at like $4 a contract. I got 3 of those, so not too bad. Spent about what, $180 to make like max $1,000. Not too crazy, but why I like this, I noticed that with those LMTs, sometimes these debit spreads are a little good for these volatility plays, where the ones near the money go up, and then some of the expensive out the monies, they don't move as much, and then we could kind of make the profit. And why I'm saying this is, keep in mind there is the chance for a pump fake. So if I could limit losses on any downside if we go up, because like I'm saying, if it ends up being a positive week and it somehow manages to go green, this is going to kind of give the green light leading into now the next CPI and the next data sets about a couple weeks out. So just keep all of that in mind. That's what we got to watch out for. But that is the first play. The second play, Tesla, I grabbed those puts last week. They came back to life in Tesla. They were outpacing all of last week, and then on Friday, they outpaced to the downside with like 6%. So the plays kind of came back. I'm just going to be watching them again. If we do get volatility with the CPI, that's a big one that have moved, and now the contracts are kind kind of cheaper after that little craziness following their earnings. So that's what I like. And they did get a lawsuit about autopilot over the weekend. So we will see what happens with that. But that is play number 2. And then finally, play number 3. This is the upside play. And this one, we talked about it a lot, but now I'm really looking at this, but I do think the premiums are jacked. So you got to be careful. But LABU, this is the biotechs, and pretty much I want upside if we are going for anything downside and we feel a little bearish. I think the biotechs have kind of been doing their own things. They could benefit off a positive market, but they could also even keep going up in a negative market. And we've been getting a little bit of the hype there from the monkeypox plays, and even now some of the hype plays, they have been medical based. So I like LABU. It is the biotechs. They have been going crazy. It's catching in a lot of this weird pocket of the market, but the only bad thing, premiums are jacked and it's very volatile and the music could stop at any moment. So watch out for that, but definitely going to keep an eye on some of those biotechs, even healthcare too this week. I think they will be interesting, but those are the main plays. As far as anything else, like I said, I grabbed next week 397.5 puts, grabbed 3 of them for 88 cents. I wanted some downside again, just with the yield curve and how things were looking coming into this week. And then even off the jobs report, I was like, all right, maybe now we start to see Wall Street shift the narrative. So that's pretty much what I'm going to be watching for. Still keeping an eye on energy and commodities. Again, they've had one of their worst weeks. So where they go from here, and again, depending on what the Fed does, the CPI, we might see some conditions of demand destruction or something possibly worse. Maybe that emerges again. We even have the jobless claims on Friday. That could even give us some insight. But essentially, only plays I had were coming into some of the bearishness. I still have those Lockheed Martins. I made half of them for free. So just riding those out, but going to be watching where commodities go, watching the CPI and the effect from it. And then pretty much like we've said all week, all we need is the data. Once the data comes out, interpret it. I think we're going to see where the sales are pointed for the next couple weeks. And then I think we could ride the wave. So I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shotted. I need you to remember, baby, you got to keep looking ahead. You got to keep praying. You got to keep focusing. And it's all about the cycles, baby. You're going through a negative one now. Oh, just get ready for the upside. Just like the market, your life is kind of data dependent. But also, don't let the market frustrate you. I'm telling you, right now, we're going to get month after month. It's clear. Data dependent. Follow it. Don't get too jumpy. Get ready to strike. And I'm telling you, some of you have been trained for this. So I hope you're ready. But I love you, Chad. See you in the morning. I hope you enjoyed your weekend. It's going to be crazy. So, okay, use these last couple hours. Woosah. If you're watching in the morning, then just wake up happy. You know what I'm saying? Wake up and try, baby. But I love you, Cole. I'll see you in the morning and enjoy yourself. And let's make it a good one. It's already excited. I'm already excited. Okay, I'm gonna just leave.